Hello and welcome to Big Deal. Today we have with us Kaku Nakhate, who heads the India business for Bank of America Merrill Lynch. Kaku, so good to have you on CNBC TV 18. Is it a difficult time for a banker in India at this point?
I must say, Nisha, good times and bad times come and go. We are in the right direction in the structural reforms that actually India has been doing. And of course, from banking side, all that's happening, clearly everybody is looking out as what our next steps are going to be. And in a way, it's going to also help us increase the governance standards and policies as we go along, in line with what RBI has been doing for the several months at length.
So, given the scenario in which last year was ruled mostly by the big reforms that India took over under Modi government on GST and demonetization, and that changed the outlook for India as well. We got a rating agency also change the rating for India. But this year, how do you see with the fraud situation developing, how is the global market really react to India, and how will the perception change?
So I must say that people have been worried about the recent developments. Obviously, we need to explain a bit better. Also, as you see, when US went through a rough time, what they did was the announcements of these whole things, or the financial mess was kind of publicized, but within a week or 10 days, the TARP was announced. And then, you know, they put the action into play. And over the next 24 months, they cleaned it up. Right. Similarly, if it was in China, if you would say, you'd probably not even know. They would have discovered it, they would have found a solution, and they would have come out with the package, and then the announcements would have come. India obviously is a democracy, and we have our own way. So sometimes what we talk openly as debate is probably perceived wrongly in different parts of the world, and hence a good resolution. And frankly speaking, I keep telling that government has been supporting banks. And while these are process changes, these are things that are happening everywhere else also in the world. Like, for example, why is cybersecurity, for example, very important? And why are these trades monitored? Is also to take care of terrorist financing. For the whole KYC AML came from that aspect. So similarly, I feel as long as we spell out the processes, we spell out the good that even RBI has done. We have done EDPMS, we have done IDPMS. How many countries really can boast of it? But all needs to be packaged in a proper fashion for people to understand that regulations are changing, and some of these are also being discovered because regulations are changing.
Right. So, Kaku, you head a large foreign bank in India. How far away are we from the global standards when it comes to real governance structures in the banking sector?
So 2-3 things I would say. Globally, everybody is been following on capital adequacy, the Basel norms. India has also been on the path. That's why if you really see our tier 1 capital has been, added on as and when required. And maybe we, look at one more year delay of FY19, but I think we should be well on track as far as, the Basel norms really are concerned. I think what really needs to be looked into is what, we have also learned across in the last 7 years or 8 years, that yes, banking clearly is relationship-based, but we cannot ignore, the quantitative directions which we may get, or the risks to be assessed, so that we also help corporates come into the loop of understanding where, what are the requirements really to get the cash flows, how to monitor them, when to put in the money, etc. And I would say in the last several months, all the big banks, and especially the private sector banks, have moved quite steadily and strongly. And the provisions have also made all of us think together.
That's right. So the whole, while we are just about coming out of the NPA situation with so many resolutions going on at this time, and bank recapitalization got announced by the government, at a time like this, PNB kind of a situation is really dampening the sentiment in the banking sector. Now, Kaku, you've been working in the equity market transactions, and I know you as very strong franchise there. Now, looking at that particular area, do you think it's going to be very difficult to sell bank papers right now in the market? I know of one situation where the investors are very, very nervous.
So I would say this, you know, market volatility is at the highest globally. If you see, you know, we had a good run of global funds coming into Indian markets when the government actually announced the bank recapitalization sometime in November. After that, India, which was an underweight market, actually started seeing large flows. There was a good amount of paper actually lined up in the first 6 months. Obviously, this kind of news and also global meltdown more than anything is going to make people think about the new paper that comes into the market. But I will 100% tell you that in this market, good paper will always find, you know, investors, because India is still on the growth path. And what we should not be, how would I say, undermining that there are now how many countries can really boast of a 7% growth. So for good paper, you will find, for example, we did IDEA. It was a good deal. You know, it was closer to a 600 million odd deal. And in a tough market, in a bombed out sector, there was a clear story and people did support a good story. So I would say that there could be delays, but the story needs to be well understood. Of course, to your point, if we resolve this resolution early, which I'm sure RBI and MOF do realize and are working on it as we speak, it would do good to steady the market. I wouldn't disagree on that point.
Of course, there are investors for good paper always, Kaku. We have seen in the market, but when the overall market condition is bearish, then the investors get very, very cautious as well. We've seen that in the past. Now, there was, focus on probably consolidation, correction. Last year, we were talking about it. Is it finally here, the real meaningful correction in the Indian bull market? Is it finally here, and how deep do you think it's going to go?
So two things I would again say. That India is no longer delinked with the global markets. So the global markets itself are volatile, and you've seen, you know, markets fall across the globe, and India cannot be an exception. You know, however good you do, flows and redemptions, you know, follow the global sentiment. So that's one. On the Indian markets in particular, if I may say, Nisha, is the story over? There could be some downside, but I think people are also ignoring, and actually our strategist Sanjay Mukim just came out with a piece few days back on the third piece on transformation of India. And there I would really like to highlight 2 or 3 points. One is that demonetization and GST impact on the worst end has already gone through. The upside is now going to come. Of course, rains have to be important. And bank recapitalization overall for the steadiness of the market is a must in my opinion. So the market from here, I don't see a downside more than 8 to 9% at max. And I think once we get around this initial, worry, for good companies, even I'm seeing buy orders on our desk even now, as what my equity guys tell me.
I'll come to that, but you said 8 to 10% correction from here. Mid caps would take a deeper cut, you think?
So mid-caps have run up also so much. So whenever you retrace from all the different pools of money.
Right.
So I would not, many times most investors forget that everything that goes up can come down partly.
Well, that is the fundamental rule.
Yeah.
But,
so is the fall, even after all this, going to be deeper than where we started? The answer is no. All right. So clearly it shows that it's more a correction and not a change in sentiment.